Good morning and welcome to another exciting episode of our daily crypto news podcast. I'm joined by my co-host today as we dive into the latest happenings in the world of cryptocurrency.
That's right. We have a packed show for you today with some major market-moving stories that are sure to grab your attention. One of the biggest stories of the day is the surge in XRP volume on Coinbase, which has actually overtaken Bitcoin as the most traded cryptocurrency on the platform over the past 24 hours.
That's right. According to the latest data, XRP is leading the volume trends on Coinbase, with Bitcoin and Ethereum taking second and third places, respectively. However, it's worth noting that on Binance, Bitcoin is still the most in-demand cryptocurrency.
This discrepancy highlights a growing focus on XRP by U.S. investors, which is an interesting trend to watch. XRP, being the third largest cryptocurrency by market value, has been gaining traction in recent times. And this latest development is a testament to its growing popularity.
And speaking of popularity, XRP nearly set a new all-time high price mark earlier this week, coming within just 2 cents of its previous record set back in January 2018. The cryptocurrency peaked at $3.38 on Thursday, before retreating to $3.30, still up 10% over the last 24 hours.
That's a massive 45% spike over the last week, which is a significant move for any cryptocurrency. This surge in value has been driven by a combination of factors, including increased investor interest and positive developments in the Ripple ecosystem.
We'll be exploring these factors in more detail throughout the episode, but for now, it's clear that XRP is a cryptocurrency to watch. Its growing popularity and increasing value are making it an attractive option for investors, and its potential use cases are being explored by more and more people in the industry.
And it's not just XRP that's making waves in the crypto market. We'll also be discussing some of the other major stories of the day, including updates on the regulatory front and new developments in the world of decentralized finance.
So stay tuned for a packed episode that's sure to bring you up to speed on all the latest happenings in the world of cryptocurrency. We'll be diving into the details of these stories and more, and exploring what they mean for the future of the crypto market.
I think our previous discussion on Bitcoin's market dominance really sets the stage for some of the news that's been coming out. We talked about how institutional investors are starting to take a closer look at cryptocurrency, and it seems like that trend is continuing.
That's right. NYDIG just released a report that shows Bitcoin ETFs saw $16.5 billion in net inflows during Q4. But what's really interesting is that the majority of those flows are going to just a handful of big players like BlackRock and Fidelity.
It's not surprising given their size and influence in the market. But it's also worth noting that some ETFs actually registered outflows during the quarter. So it's clear that investors are being selective about where they put their money.
Absolutely. And speaking of selectivity, it's interesting to see how Bitcoin performed compared to other asset classes in 2024. According to NYDIG, Bitcoin beat out every other asset class, and correlations with other assets actually fell in Q4.
That's a big deal, especially for investors who are looking for diversification. It suggests that Bitcoin is starting to behave more like a standalone asset rather than just following the broader market trends.
Right. And that's exactly what institutional investors want to see. They want to be able to invest in assets that can perform well even when the rest of the market is down.
Building on what we discussed earlier about market dominance, it's also worth noting that some other cryptocurrencies are getting a boost from some unexpected sources. Solana and XRP, for example, surged recently after a report suggested that Trump might back a strategic reserve of America First cryptocurrencies.
Yeah, that's a pretty interesting development. But it's also worth noting that some experts are already raising red flags about this idea. They say that the government shouldn't be making venture capital style investments in cryptocurrencies, and that it's a bad idea to try to create a strategic reserve of altcoins.
I can see why they'd be concerned. The government's role is to regulate and provide a stable environment for investment, not to try to pick winners and losers in the market.
Exactly. And it's also worth noting that this kind of initiative could actually end up harming the very cryptocurrencies it's trying to support. If the government starts investing in certain coins, it could create an unfair advantage and distort the market.
So it's definitely a development worth keeping an eye on, but for now, it's clear that the market is responding to the possibility of a strategic reserve. and we'll have to see how it all plays out.
We left off discussing the recent price movements in the crypto market, and it's interesting to note that despite Bitcoin dipping from $100,000, the overall sentiment remains bullish.
That's right. If you look at the numbers, we're seeing a slight drop in Bitcoin's price, but other coins like ETH and XRP are still holding strong, up 1.71% and 6.40% respectively.
Building on what we discussed earlier about the market's resilience, it's clear that investors are looking beyond the short-term fluctuations and focusing on the bigger picture. Speaking of which, have you seen the latest news about Trump's plans to designate crypto as a national policy?
Yes, I have. According to reports, Trump may announce crypto as a policy priority, which could be a huge boost for the industry. However, what's interesting is that Bitcoin's Coinbase Premium remains muted, signaling a lack of excitement among U.S. investors.
That's a great point. For our listeners who may not be familiar, the Coinbase Premium refers to the difference in Bitcoin's price on Coinbase compared to other exchanges like Binance. Historically, when the premium is high, it indicates strong demand from U.S. investors.
Exactly. And right now, the premium is actually negative, meaning that BTC trades at a slight discount on Coinbase relative to Binance. This is a stark contrast to the November-December price rally when the premium soared.
So what does this mean for the market? Is it a sign that U.S. investors are taking a wait-and-see approach, or is there something else at play?
Well, it's possible that investors are waiting for more clarity on Trump's plans and how they will impact the industry. However, it's also worth noting that the overall sentiment remains bullish, and many experts believe that the stars cannot align more positively for crypto in the U.S.
That's a great point. And looking at the broader market, we're seeing a surge in AI investments, with AI agents hitting $18 billion in value. This could be a huge opportunity for crypto to intersect with AI and create new use cases.
Absolutely. As we've discussed before, the intersection of crypto and AI has the potential to revolutionize industries and create new opportunities for growth. It's an exciting space to watch, and we'll be keeping a close eye on developments in the coming weeks.
Well, that's all for now. We'll continue to monitor the markets and bring you the latest updates as they happen. Stay tuned for more on this developing story.
I think it's interesting that we were just discussing the growing trend of investors seeking alternative sources of yields in the crypto market. It seems like we have a great example of that with Berachain.
That's right. Despite not having launched its mainnet yet, Berachain has already attracted over $1.7 billion in deposit vaults. It's clear that investors are eager to get in on the ground floor and start earning rewards for helping bootstrap protocol liquidity.
That's a staggering amount of money, especially considering the project hasn't even launched yet. What's driving this level of interest in Berachain?
Well, the pre-launch deposit vaults are a big part of it. By partnering with protocols like Stakestone and Lombard Finance, Berachain is allowing users to deposit wrapped Bitcoin, Ethereum, and other supported assets in exchange for early access to the platform. It's a clever way to build hype and incentivize users to get involved.
And it's not just retail investors who are taking notice. I've seen reports of institutional investors and even some big-name VC firms getting in on the action. What do you think is driving their interest in Berachain?
I think it's a combination of factors. Berachain is promising some pretty innovative solutions to the scalability and usability issues that have plagued other blockchain platforms. And with the rise of DeFi and decentralized applications, there's a growing demand for platforms that can support
That makes sense. Speaking of growing demand, I wanted to touch on another topic that's been getting a lot of attention lately: crypto in retirement accounts. We've had a few listeners reach out to us asking about the feasibility of adding Bitcoin to their IRAs.
Great topic. There are definitely some considerations to keep in mind when it comes to adding Bitcoin to a traditional IRA. Brian Quartness from DAIM recently wrote a great piece on this topic, highlighting the importance of setting it up correctly with a platform that offers comprehensive support and peace of mind.
That's really important. I think a lot of people assume that adding Bitcoin to an IRA is as simple as buying some coins and sticking them in a retirement account, but there are tax implications and regulatory considerations to navigate.
Exactly. And it's not just about the initial setup either. Eric Tomaszewski from Verde Capital Management has some great tips on preparing for tax season when you have crypto in a retirement account. It's definitely worth checking out for anyone who's considering adding Bitcoin to their IRA.
We'll make sure to link to those resources in our show notes. It's clear that there's a growing interest in crypto among investors, and it's not just limited to retail traders. Institutional investors and even financial advisors are starting to take notice.
And that's what makes this space so exciting. The intersection of crypto and traditional finance is creating new opportunities and challenges that we're just starting to explore. It'll be interesting to see how this all plays out in the coming months and years.
As we wrap up today's episode, I want to circle back to the controversy surrounding the FDIC's handling of digital asset oversight. Senator Cynthia Lummis's scathing letter to FDIC Chair Marty Gruenberg has certainly raised eyebrows in the crypto community.
That's right. The allegations of misconduct, including destroying materials related to crypto operations and silencing whistleblowers, are extremely serious. It's clear that Senator Lummis is demanding accountability from the agency.
And this story ties into a broader theme we've been discussing on the show, the need for clearer regulations and more transparency in the crypto space. It's clear that there's still a lot of confusion and uncertainty surrounding how government agencies are approaching digital assets.
Absolutely. And it's not just regulators that need to step up their game. We also need to see more innovation and user-friendly solutions in the crypto space. That's why I'm excited about projects like Amanu, which is aiming to bring Apple-like simplicity to crypto wallets.
Yeah, we talked about Amanu's mission to eliminate seed phrases and make crypto more accessible to a wider audience. It's interesting to see how Gianluca Minapro's personal experience with Argentina's economic crisis has shaped his approach to building a more user-friendly crypto wallet.
Exactly. And I think Amanu's approach is a great example of how crypto can be used to empower individuals and provide an alternative to traditional banking systems. By making crypto more accessible and user-friendly, we can start to see more mainstream adoption and a more level playing field.
So what are the key takeaways from today's stories? For one, it's clear that regulators need to be more transparent and accountable in their handling of digital assets. We also need to see more innovation and user-friendly solutions in the crypto space.
And from a market perspective, it's going to be interesting to see how the FDIC responds to Senator Lummis's allegations and how that might impact the broader crypto market. We'll also be keeping an eye on projects like Amanu and their efforts to drive mainstream adoption.
Well, that's all for today's episode. Thanks for tuning in, and we'll catch you tomorrow.
And don't forget to subscribe to our podcast and follow us on social media for the latest updates and analysis on the crypto market.